Hi everyone, today we'll be going over the Active Address Sentiment Indicator, or the AASI, and how you can use this tool to help improve your Bitcoin investing and analysis. This chart, as well as many others, are all freely available on lookintobitcoin.com, your #1 source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So what is the Active Address Sentiment Indicator? Well, it's taking into account two different metrics, and we'll just isolate them one at a time. So it's taking into account the 28-day active address change in percent. So that is the active amount of addresses on the Bitcoin network, and as well as that, the 28-day price change of Bitcoin. And as you can see immediately, the 28-day price change and the 28-day active address change on the chart shows a lot of data. And to begin with, this can be a little overwhelming to really make use of this indicator and make sure you're using it to its fullest. But really, it is quite simple once you actually boil it down into the two individual metrics and really understand the data that it's showing us. So to make this simpler, I'm just going to isolate the data of the previous few months so we can see them a little clearer. So as we can see here, this grey line, the 28-day active address change percentage, as we hover over, we can see the active address change here. So for example, 0.97%, and that is the average increase over the past 4 weeks, or about a month, of usage of individual addresses on the Bitcoin network. So every Bitcoin wallet can be monitored and tracked at all times due to the fact that Bitcoin is built on top of blockchain technology. So what we can actually do is use all of that data from each individual wallet, each individual address, and see how active it is on the network. This data ends up being incredibly useful as it shows us the actual usage of the Bitcoin network rather than just the price. It shows us some of the underlying network utilization. What we can also see here is we have these green and red upper and lower deviation bands. So these are actually running off a moving average based on this 28-day active address change, and then just adding a deviation to the upside and to the downside, so we can really average out to see where the average peaks and bottoms are for this value. So even in isolation, this 28-day active address change can show us a fair bit of useful information. As we can see in these periods here where price has bottomed out and really dipped quite heavily, we can see a quite stark decline in the amount of active addresses, just as the general retail interest in cryptocurrency dies down. As price tends to dwindle, we see this positive correlation between network usage and price. And then once again, as price begins to climb again, we can again see the average 28-day active address change begin to increase once more. But this tool is best used in unison again with the 28-day price change percentage. So once we load up this orange line here, we can see it actually just relates to the amount of price change we've seen in Bitcoin over the previous 4 weeks. So as we peaked here in early 2021, we actually could see that Bitcoin had increased over 126% of the previous 4 weeks, a very substantial change. And then to the downside here, after we had dipped quite substantially, we saw Bitcoin had actually moved down over 41% over a 4-week period. So once we've overlaid this price change over the active address change, we can actually see periods where the price change has surpassed this upper deviation band of the active address change, such as here, here, and even at this big spike here and here. We can see these were great areas for potential profit taking. And one of the unique aspects of this tool is whereas a lot of on-chain metrics and market cycle charts focus on the really long-term macro moves, the AASI really focuses on the lower timeframes and can show us very much intra-cycle swings to the upside and the downside. As we can also see on this chart, as we can see, when the price change actually dipped beneath this lower deviation band, it actually showed a period where Bitcoin was forming a bottom here after we'd already moved a substantial amount down and Bitcoin really started to flatten out a little bit. This was actually a great area to pick up some Bitcoin for a short to medium term hold. And this is true fairly regularly. If we look at this dip beneath the band here, this actually coincides with this dip or pullback in price we had just before price once again climbed and we reached new all-time highs. So just to summarize, the Active Address Sentiment Indicator, or the AASI, compares the 28-day change in price in percentage terms with the 28-day change in active Bitcoin network addresses, again in percentage terms. We then have upper and lower bands created using standard deviations of the 28-day change in active addresses. And when we use these bands alongside the price change line, we can actually see areas when price change far exceeds this upper band, that this often indicates a short-term overheated market. And the same for the downside. Once we have these 28-day price change dipping far beneath this lower band of active addresses, this usually indicates a short-term bottom in price. Unlike many other on-chain metrics, the AASI actually examines lower timeframes for short-term moves as opposed to big macro swings. This can be used for more short-term daily or weekly trading and investing. If you like this video, then please visit lookintobitcoin.com. By sharing valuable data through visual storytelling, charts, and information, we want to be the best publicly available resource on the internet for Bitcoin data. Don't forget to like the video and subscribe to the channel to learn about all our other charts and gain even more market insights. Thank you very much for watching, and I'll see you in the next one.